Good morning, everyone. Welcome back to our next session. And also welcome to our portfolio founders who have joined us from here on. So, like I mentioned in the morning, we have a very exciting agenda for the rest of the day planned. And we are starting out with a very, very interesting conversation with a gentleman that I have known for over 10 years now. I met Sriharsha before he started Swiggy. And we were having a conversation in my previous fund, and I was very intrigued by saying, how will you ever execute something so complex, what he was planning? And I remember very distinctly, he said, ho jayega, which really means we'll get it done. And here we are, one of the most successful companies to have built in the, first in the food service space, and now a leader in the quick commerce space. So may I invite Sriharsha, co-founder and CEO of Swiggy and Instamart, for a quick conversation. The way we'll plan it is, I won't take all his time, maybe 25, 30 minutes, just for having a conversation, but leave a lot of room open for Q&As so that all of you who are curious and excited about hearing about what's happening in the space, we leave a lot of time for you to ask the questions. Yeah, Sriharsha, welcome. So let me start by the very obvious question. In a way, you are the pioneers of the idea of quick commerce. And something must have triggered this feeling that this is an opportunity to be done in India, which, as we know, has not really worked in most of the rest of the world. So what was the intuition behind it? How did you even conceptualize the idea of quick commerce? And what really drove you to get started? And then obviously we'll dig into more of how it's been going.
Cool. Firstly, thanks, Kawal, for having me. Thanks, Team Fireside. As for pioneering this quick commerce thing, I think it's now gone through like 4 iterations in 4 years. We kind of pioneered the first 2. And then there's like constant learning and iteration in the market to figure out what, where it goes to next. Even today, I don't think we have complete clarity on where it goes to next. But this version of the world, if you look at it today, like we're not too far away from a world where about 50,000 SKUs will be delivered in less than 20 minutes, 10 to 20 minutes to like a large section of India's consumers. This honestly was not like what we found our original PMF with. What we found original PMF with was 2,500 SKUs in 30 to 45 minutes. And it's come so far from what we thought. We thought it was closer to, let's say, a 7-Eleven that didn't exist in India. And we thought we should exist, which is purpose-built for, let's say, the more upwardly mobile folks, like, the top India One. There's no retail format built for India One per se. We keep talking about mom and pops, but they're not built for primary consumption of India Ones. There is incidental small consumption over there. That was the original listing. But if you go back even a few more years, even when I came for the last fireside, this thing, when I spoke, we were still sketching out like another new initiative at the time called Swiggy Stores, where we were trying to deliver from neighborhood retail stores, pharmacies, etc. And I think we were just a few months in when I came and talked about maybe what the future looked like. It didn't look anything like what we thought it would. In 2019, we were delivering from these stores, but what we learned was, unlike restaurants, you can't digitize retail broadly like in the same way. So the availability of SKUs was subpar, the fill rates were subpar. Overall experience was pedestrian. But even for that, there were a few users who kept coming back. So we were like, they must really want it. Even if for this experience, they want to come back for more. That's what forced us to then think about, okay, can we just relax what the operating model needs to look like and see if we can invent on the consumer's behalf to see if there is a new operating model that can solve this availability and fill rate problem to get more habit created. And that's kind of how in the middle of the pandemic, we launched Instamart, this V1 of what we call QC today. And that led to multiple turns after. It's been quite the crazy 3-4 years for the the whole category so far.
So I think one of the questions that we keep getting asked, and obviously it's a very intriguing question, is why hasn't it worked anywhere else in the world? And why do you think that India is so unique that it's taken off so well? I mean, the projections are that it could be $50 billion in the next 4-5 years, or maybe even bigger for that matter. So how do you see the India landscape and the India opportunity to be different or unique in some sense?
Cool, awesome. So I think firstly, if you look at why the economics make sense, even at 10 minutes, I think the two key deciding factors are what is the average order value and what is the delivery cost. The average order value by delivery cost is actually primarily poised to be a reasonable, like a very healthy business. And this also wasn't obvious, but again, the category has gone through a few turns. The reason that it is able to work is we are not seeing a rigid top-up only market today. I think even if you speak with the larger incumbents in FMCG, I think there is some penetration even at, let's say, the higher size SKUs, which kind of adds to the average order values, which makes them much higher than what we modeled in 2020. But maybe we're already looking at 50 to 60% higher than what we modeled in the average order value. And that's because what we didn't plan for, but what happened is that users, when they came for the distress, impulse, indulgence purchase for the first time. But as long as the prices weren't irresponsible, they were happy to start adding other items into the basket. Therefore, almost blurring the lines between like a very sharp top-up occasion and a sharp stock-up occasions. Consumption occasions are moving a little bit. So we see a lot of penetration and hit rate into these core, maybe monthly consumption SKUs, but happening in a more random way than you would expect. So that is one big part. So the fact that you're also able to get a lot more incidental consumption of, let's say, the monthly stock up basket makes the order value higher. That is one. The second reason why, let's say, the order throughput itself works in India is because I just think that modern trade never got built out in the way that it has in various other countries. So this India one segment's needs were achieved with a lot more convenience in a lot of other markets. So it wasn't a big delta when, let's say, in online versions of this came. Over here, it's still like very, very like early days of getting built out. So that way, I think India itself is going through multiple of these cycles. Even if you look at QSR got like 30 to 40 years to build out without any paradigm shifts in the US, in Europe, and maybe Asia, parts of Asia. In India, like in year 15 of QSR or year 10 of QSR, food delivery came and leveled the playing field. So that way, things happen just. Internet and online disruption is happening much earlier in the overall regular business life cycles than anywhere else. So that's the reason I think the need was a lot more profound. Saying it's not just delivery convenience, but proximity convenience also hasn't been that high.
I think the obvious follow-on question will be clearly there has been a massive upsurge in the e-commerce space the last 10 years, and one of the big theses for Fireside itself has been digital-first brands and how these brands have built out. But looks like Qcommerce is now the next disruption that is happening. How do you see the difference between e-commerce and Qcommerce? Are these fundamentally the same business, extending into a faster delivery, or there are some real big differences between the two, and that will create a new market opportunity for brands and consumers?
Cool. So I think maybe one brushstroke to call all of e-commerce and call all of Qcommerce will be a little hard. Obviously, the world began with limited physical space and limited aisle space for brands. And then e-commerce offered the idea of the unlimited aisle, the endless aisle that has millions of SKUs for what it's worth. But I think that e-commerce as we know it did not solve for, let's say, the grocery FMCG part quite well. They probably solved very well for electronics, mobiles, fashion, a bunch of categories. But these categories were largely untouched. Yes, there was penetration, but you could hardly say that they broke it open in the category. That has been the opening and the wedge for, let's say, Qcommerce to come in, because if that was already well done, then there wouldn't have been an opening. But today there is an opening. And what that means is, I think there are multiple equations at play. If you look at like the traditional e-com folks like Amazon, Flipkart, etc., they're obviously trying to get faster. What you'll see is Qcom trying to get incrementally slower to add more selection. So there'll be like small kind of friendly fires that we'll see in the next few years. But if you look at how it has evolved, like, you know, when Jeff Bezos started in '94, everything came out of one big box in Seattle. As more demand came, he said, let there be one more big box in New York, one more big box in San Francisco. And they were executing on that, and then they went one step further, where they kind of stopped to, at their prime now kind of version, where they said, we'll have multiple of these inside the city, but we'll deliver for 2 hours. I think they didn't move into the next one. Maybe that was, you'll see like a reverse. I don't know if we'll end up having a big box that way. That would seem highly inefficient, the ultra big box. But I think you will see a lot of mixing of the use cases. Ultimately, what also is interesting is that Qcom is winning the attention game from the consumer, which means that the frequency of Qcom is like multiple of the frequency of e-com on an average basis. And when you have the attention of the user, you get that many more chances to educate the user that you have this also, that also. And that does give you an advantage in being able to cross-sell other products that you may have on your platform. However, I think in general, I think the mantra is that, I was speaking about it even recently somewhere, there is an anchoring bias. People are used to 10 minutes now, and they just can't unsee. Even when food delivery, why does it take 30 to 40 minutes? It is anchoring. Without the anchoring, then our anchor would have been Amazon delivers in same day, so if Swiggy delivers food in 30, 40, that's super fast. But the anchor has changed, and that anchor changing has implications for multiple businesses. So that thing is real. At the same time, can Qcom take aim at every category in e-com? Is there a fight imminent in every category? I honestly don't know yet. Still think there are not enough answers on if a fashion is an endless aisle right to win business, does Qcom have a right to win over there? Maybe it'll have to look completely different from, let's say, the e-com fashion model to have a chance. If you just try to say it's the same thing but in 10 minutes, I don't think it's probably going to work.
I think you opened up my next set of questions, obviously, in terms of what is the scope of something like a quick commerce? I mean, one of the debates that we have internally is this more the digitization of the mom and pop stores? Is that the angle at which QuickCom is working, or is it the the faster anchoring, as you called it, of the e-commerce side of things? And in that context, how does the category play come in? Because, like you said, not every category may behave in a certain way. I mean, you have a very wide range of products now on your platform, gold coins and some of the newer, what one would have never imagined as a 10-minute kind of requirements. So how do you see that? Almost like, where do you fit in, if I may, and do you fit in at all in this landscape of different channels of consumption today in the market?
See, at some level, I mean, gold coins won't be available right now. They will be available during Dhanteras. So it's not an everything store all year. It's more of an everything store for right here, right now. That is how we look at the world. For right here, right now, with gold coins are probably what everything store for you right now looks like, then Qcom platform should have it. That is the principle. So it's a lot more, can I say, transient retailing, where it's not like it's the same thing that is sold. Obviously, we'll have like 60-70% of the SKUs that are going to be common. But I think as we move forward, I think going by hyperlocal or by like time of the month, year, etc., you're going to start seeing moving inventory lines. So to that end, I don't think Qcom defines itself by categories as sharply. You will see that maybe in the wedding season, the kurtas and festive wear will go up, and then again they'll go through like this thing. So that only just has to keep mimicking consumer needs in terms of what they want right now. In terms of some categories, look, I think behavior is already changing, because, and that follows a certain loop, right? In the beginning of quick commerce, consumers weren't even venturing to like search for maybe a bed sheet. but they search for a bed sheet pretty fearlessly on Qcommerce today, whichever app they may be on. Then because there is a sense of confidence collectively that consumers have grown that this must be available. And that takes advertising from brands, on-app merchandising from brands to create that trigger. Because if you look at behavior, generally there are still like a bunch of orders that are placed on e-commerce that are probably available in Qcom at the same time, but the consumer imagination is behind, let's say, the selection that is already available. But that will change. With time, again, imagination will catch up with selection, and that leads to like new selection, then imagination catching up, and we'll see where that stops. There are laws of physics around how large the SKUs in Qcom can be, but there's no category thinking beyond a certain point. Of course, there is a broad section of household needs that are bread and butter, where everyone's making a play, home and kitchen, toys and stationery, bunch of these. Now everyone's making some forays into like mobile phones, pharmacy, and I think in some categories the product market fit will be a lot more violent than some others, and that's what we'll find out in the next 2-3 quarters.
So I'm going to shift gears to where do we go from here. And obviously, there are different vectors of growth for players like yourself. There is obviously the geographic expansion, there is the category expansion. There is also this whole hybrid model of, some 10 minutes, some 20 minutes, some maybe 30 or even a couple of hour delivery. So how do you see the landscape of, and obviously there are many more players in this space, e-commerce in India was dominated by 2 large players and then some vertical players, but you're already seeing 3, significant players, and then 3 more are likely to come in. So how do you see, if you can paint a picture for us in say 3 to 5 years, do you have any, like a seer view on what we can expect to see in the
Even
Qcommerce?
if I hazard it, I guess I will sound extremely stupid and it won't age well in a few years, so I will resist that question. But honestly, like at a broad level, I think you will see a lot more broad-based penetration of QC. I think the amount of, I think we're still seeing the early parts of, let's say, QC penetration in categories that seemed like novelties last year, whether it is beauty, personal care, home and kitchen. I think it's just still the beginning. The SKUs just have gotten added from, speaking for our own selves, I think we have probably 3-4x the selection that we did 4 months back at an overall, what we keep. Like we've also had to overhaul our overall store sizes and networks, and we've gone through like a bit of a painful transition. So I think that's come now, like the sell-through is going to begin, the merchandising is heavy. Like if you look at the Qcom apps right now, the home pages don't look like they're selling grocery. They happen to be selling grocery also. Now that's a challenge because this is the first time such a user journey is getting built. Because the grocery journey is all about efficiency. Tack, 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 go. Whereas let's say the commerce journey is a little bit more discovery and browse heavy, and everyone's figuring out how like this hybrid creature operates. So in short, I think more categories will be experimented for sure, and definitely a few of them will be resounding product market fit. The next one is that this selection expansion will come at like gradations, maybe 10, maybe 20, who knows, maybe 30. Eventually, I think as long as the 30-minute offering is still meaningfully quicker than any other alternative, it is still quick commerce. So I think that is going to continue. And we have our own anchors in food delivery, but I think in QC, penetration in the cities beyond top 10, top 30 will follow a very different curve from food delivery. Because I think, one, the barriers to entry, like in food delivery, are different because the restaurant selection itself is thin, the convenience use case, because typically runs on white collar, immigrants, workers, like who are like the bread and butter of food delivery. They don't have the convenience problem in these cities. And we don't add any selection to the city. We're just getting the same selection, which is usually very thin already in these cities. But with QC, I think access to brands will be, for our core TG, significantly better than what users would have experienced. If you wanted an Epigamia, if you wanted a bunch of brands that you've seen, but access is difficult, that is all going to open up. So QC is not just going to solve a convenience problem. in the smaller cities, it's going to solve convenience plus access to selection in a very, very big way. So I think it'll be a lot more secular in this, and everyone's close to like the 100 city mark, and then we will expand some more till there is violent feedback that this is where you stop.
And Sriharsha, the expansion into these next towns and next cities, the 100 cities you talked about, how realistic is that, given that, you know, there is an element of, like you called it, average order value, there is an element of, you know, density of population and so on. Because one of the questions that we keep, you know, debating and keeps coming up is saying, is there a limit to how deep you can go? And obviously, you know, that also defines the overall scope of, you know, you talk to an Amazon and others, they have a very different view of, you know, coverage of pin codes, and, you know, they're looking more from that point of view. So are you seeing a natural cap somewhere in that 100 city kind of a paradigm?
There will be a cap, there's no doubt, but at 100 we are not seeing that yet. Even that we would have doubted maybe a couple of years, but I think we're not seeing that yet. Of course, like, is there space for 6 players, 7 players in city number 120? Probably not. But overall, I think the category is going to be $40 to $50 billion in 3-4 years. So that will support even a 4th player to have maybe like a $5 billion business that can operate at 3% EBITDA.
And do you, I mean, I had to ask this, but do you worry about competition, or is it still a market expansion opportunity? And are you like more tracking what's happening in the competitive landscape, or you have your own roadmap and, you know, that's really what you're building on?
It's a bit of both. It's a bit of both. I think, do I worry about competition? We were born in the middle of a war. So we don't know any other way. I quite honestly don't remember the last time there was 2-3 months of calm. So that is BAU for us, and as it is, it's obviously with the 3 folks fighting very hard, then I don't know if incrementally 4, 5, 6, 7 change much. Because you're already like in 3D chess mode that is complex enough. That forces you to figure out how to do category expansion, market expansion of your own, which is why it is connected. So then that pushes us to say, okay, then maybe pharma, we should go and make a big bet and figure out if we can do an opening there. So that is happening already.
And maybe one last question on this topic, and then I have a couple of questions around our portfolio and how we can work more closely with you guys. I think the obviously, you know, question which again is a debate right now because nobody knows the answer is what are the challenges and what, you know, what could go wrong, and is there a potential risk to the model itself, or at least in the way it gets built out? I mean, how do you think about that?
I don't think there's going back over here. I think even if you look at the economics right now, they're way better constructed than food delivery was in 2019 when demand was starting to bottom out. So that way, I think the headroom is very clear that the model works, is quite clear. Blinkit's already demonstrated like 1-2 steps further. So I don't think we're headed for a different version of it. Now, versus the 50 billion, will it be 35 billion, 40 billion in 3-4 years? Who knows? I think, obviously, even if you look at, again, the anchors of food delivery, now in the last 2-3 years, growth has been in the teens, but that's come from, let's say, moving contributions from 0 to 8-9% in the last 3 years. So platforms go through these cycles, then there's an absolute growth cycle, then there's some balancing and monetization cycle, but I think behavior as we know it has changed. So there's no going back. There's no going back. So you should, at the same time for your brands, maybe nobody should be Qcom only, but they should be Qcom aware and Qcom first, because I think you have to have other channels where you get users' attention. And ideally, brands should be in a place where they're getting searched for on Qcom to get a more unfair share of the Qcom channel and all the benefits. Like there will be commissions, advertising, everything is a virtuous loop. If you have more and more users searching for you rather than just discovering you.
Yeah, so maybe I can just take a few minutes on that topic and then leave some room for the Q&A for the audience. So, you know, we have all our brand portfolio founders here. There are over 40, 50 plus companies. If I'm not mistaken, 30 plus of them are already on Qcom platform, certainly on yours. And you briefly mentioned this point about there is a more brand-led narrative and search on these platforms than say typically on a e-commerce or even in the more classic search platforms. So what would your advice be to our portfolio founders on how they should treat this channel? Because one of the big things that we are seeing is growth on all the platforms in quick commerce has been explosive. I mean, at a high level as a portfolio, when we were doing maybe 10 crores a month or $2 million every month of revenue, I think we are looking at a 10x number now or in the near future, and it could become even much higher. So this has been a phenomenally explosive phase for everyone. But there is a method to madness. There is a certain way that brands have to think about the channel and how they operate within the channel. So is there some headline guidance that you can share with us how they should think about it, and what are the imperatives which they must absolutely make sure that they are on top of?
So I got asked this somewhere else and I didn't have a good answer, so I went back to the category team and understand what do you think brands should do over here. The answer I got was, listen, anyways, insurgent brands fighting against incumbents, the thing that they have in their advantage is the agility, the innovation, the product development, all of that is right to play for, anyways, for an upcoming consumer brand. What I thought we also heard is that a lot of brands are also transitioning from the e-com world to the Qcom world, and their anchors on supply chain are a little too hard on e-com, where, for example, they may say that, oh, but I can just ship all of my goods to Amazon and they take it from there. Why can't it be that easy? Why can't you just light up pan-India, etc.? So I think brands can do more to understand the QC supply chain more than they do and be more flexible to make more of the opportunities that are out there. Sometimes you may just want to take that bet. I mean, easier said than done, because as a founder of a brand, you already feel like this product is going to make everything else look like a footnote. Your latest product, your latest brand is going to be everything that the consumer wanted. So that's natural, can't help it, but I don't think the supply chains are there now. So that amount of flexibility in taking these smaller sized bets and then failing, working at that level and then bracing for the next level will, I think, help and separate maybe the brands who are able to make this work and be that much more mindful of the QC supply chain versus, let's say, just because Amazon and Flipkart is a very different model that way. But that's the one big answer I got.
Okay. And I think we are realizing that Adarsh is working from our side and actually enabling our companies to really focus on that. And maybe the last question from me is really about the role of brand as a driver of discovery and therefore on the platform, because at least our intuition is that the search, the consumer behavior on our e-commerce platform is still more category search, more looking for what is the wider availability or accessibility. But here, at least our understanding is even through our brands that 60-70% of the searches are branded searches, and consumers are coming in with the intent to buy a Baker's Dozen or a Surf Farm or a Fruban or a Sweet Karam coffee.
Are you saying that it's higher than e-com?
That's what our understanding is, and we can share some statistics that we have. So that's what intrigues us, because obviously we are focused on building great brands, and that this is playing to our strength much more than, say, typically what would have seen in the e-commerce landscape.
No, I didn't know the comparison numbers themselves, but what you're talking about is a strong behavior that we are seeing. The successful brands that don't need to maybe spend a disproportionate percentage of their budgets on advertising and other growth incentives, etc., are the ones that are being asked for by consumers. So that's why I said it can't be QC only. You have to have your own story outside the QC storefronts for consumers to learn more about you. And then QC is a point of sale. I don't think it's a point of discovery that much yet. So to treat it as a point of sale is what's going to be most important. Yes, shelf space is increasing, so you can get more this thing up there, but at the same time, shelf space increasing means that attention spans, for the same attention span, you're going to have more SKUs. So if you assume that there was a certain attention span that was undivided, as more brands, more SKUs come in, that is going to be split. So I think the biggest insurance is to really, obviously, like have a great product, have a great story, and then just keep increasing the organic search percentages.
Great. I'm going to leave room for the audience to ask questions. I mean, I can go on for 2 more hours, so don't want to be selfish here. You have so many questions already lined up. Yeah, maybe we can start from this side.
Sorry. Hear me? Yeah, okay. Sriharsha, thanks for this. And Kaval, all the questions on brand I wanted to ask, you asked already. But, you know, this is a lateral question about regulation. Qcom has actually grown without a lot of regulation, but that's huge pushback is coming. I'm Pranjal Sharma, I'm based in Delhi. I look at the policy-business interaction. So, you see a lot of pushback coming in driver partners, in terms of the kind of vehicles they use, whether e-vehicles or not. There are going to be regulations on how much minimum time that you can promise, because beyond a point it is maybe putting pressure on the civic facilities. My question to you is, how do you see the regulatory pushback coming through at state and national level, and how do you see that shaping your business model, because that usually has an impact on cost per delivery?
Hi, your name, sorry?
Pranjal Sharma.
Pranjal. Hi, Pranjal. Firstly, I won't agree that it hasn't been regulated. So I don't know why that is true.
I said it hasn't been regulated enough. My point is that there is regulation.
I know how one agrees on enough.
The point is, see, it's not about where we are, it's about where we are going.
Right.
So how do you see that shaping the business model for Qcommerce, not just for you, but across the sector?
Look, I think some of these we are familiar with already. Some of these, I think, actually we are in one of the most progressive governments from a gig worker and delivery worker standpoint. I think there is ample recognition that there are now like millions of folks who are making additional income in a job-starved economy well above, let's say, minimum wages, well above minimum wages. I think some of these numbers are out, but they're close to 25,000 per month for folks who consider it as a serious way of making money. So on that, to that extent, I think, you know, regulation has been supportive. There's obviously always if you see even the social security work that the government is doing, I think, you know, platforms are very supportive of it. Some of these benefits existed even before the government. There is going to be some incremental cost, but it's not category breaking at that level. So we welcome these initiatives. We just want consultation with the government to be able to do that. Outside of that, if you look at anything else, I can't find any very crazy moves that are going to alter the category's growth.
Jayant, you had a question.
Hi, Sri Jayant from ITC.
Hi.
A similar question, but you know, one reads about the impact on the Kirana stores, and this has been well broadcasted. So how do you handle that kind of a reaction?
See, I think what we can do is to actually explain, you know, the other side of that narrative. There is every time, even with the pharmacy, we see blowback, and there's a lot of counter-narrative that comes. Counter-narrative is the name of the game. Even with the restaurant industry, we had to, you know, go through like a journey of figuring out how to make everything work. Over here, honestly, I was alluding to it even during parts of the conversation. You would know that even the SKUs that are listed on a moment like a Kirana are very different from the SKUs that are listed on a Qcom. There are no loose cigarettes being sold on Qcom. There are no 5 rupee shampoo sachets being sold on Instamart. D2C brands are not sold on Kiranas. So I think the consumer is very different from the consumer there. When you think about the core consumer, yes, will you spot an India One consumer buying a solitary Coke from a Kirana? It's possible. You may get a photo of that. That doesn't mean that it is moving wholesale share from, let's say, the Kiranas, because the job to be done in the consumer consumption occasion, the selection are quite different, which is why I think all of whatever has happened so far is coming from modern trade and e-commerce, which is where the hardest hit is also seen today.
Hi. Yeah, hi Sriharsha. Yeah.
Hey, hi.
Hi. Just want to know what are your expansion plans in terms of, you know, how do you all go about choosing a location what kind of challenges you all face apart from the cities what we are already in. And also secondly, if you can also highlight what have been the big days for us, which has really surprised the Swiggy team in terms of orders which have come in, which was really never expected by the team members by any estimates.
Cool, awesome, thanks. So I think the first question, it is getting increasingly harder, definitely slightly harder, and some of the core central and affluent neighborhoods, it's just incredibly hard to find warehouses of the size that you want. And they also have like certain specs. They need to be large enough. They need to have like a waiting area for delivery partners. They need to be on the ground floor. So there are enough constraints that make it a big challenge. So sometimes you just have to choose some stores that operate at 6-7 times the average store rental, but it doesn't move the averages that much because there are only a small percentage of them that operate. So it is getting harder because of, let's say, the constraints now. In the next wave, store sizes are probably going to get even larger. So one wonders what that looks like as they go. And in the smaller cities is generally very, very easy compared to, let's say, these affluent neighborhoods in the big cities. That's where the majority pain is. Smaller cities are relatively simple because you also have to be able to serve an order in 10 minutes. You can go much further in last mile in a smaller city than in a big city. So that gives you that much more flexibility to find that store. Sorry, what was the second question? On big days. So this year nothing surprised us, but what really caught us by surprise last year was Father's Day and Mother's Day for the first time went bigger than the New Year's peak that preceded it. As a proper millennial, I think that caught me also. I mean, the team also by surprise. The team is half and half Gen Z and premium millennial, but I was like, where the hell is this coming from? What is happening? Am I being irresponsible not by buying anything for my parents today was my reaction after that day.
Hi, I have a question. Hi, here, Kaval, here, last speech.
Okay, hi.
Hi.
Hey, I'm Hunt.
Hey, good to see you. So first, Sriharsha, so, as a founder, I really respect you, and I'm invested in the pre-IPO and long term, I'm sure I'll make a lot of money.
We're working hard.
Yeah. Yeah, I was like surprised to see you here. So I was like, go there, go, my shares are there. But as a partner, I'm a partner to Swiggy and we've just launched something in the morning, with Swiggy, as at Boat and Swiggy together. We are like, very happy. The sales from Qcommerce and the growth are much larger than our expectations. So thank you for that. And as an investor, I've seen a lot of small startup companies. I see them on Shark Tank also. I think the biggest growth is coming from Qcommerce. There was an era which I say, when Boat, Mamaearth, we were born on the e-commerce companies, and I see a lot of companies who are now born on Qcommerce. So thank you for that. I have a very, very weird question. I wanted to ask, which Z do you like more, Zomato or Zepto? And what do you, who do you respect more, and what is that one thing which you do better than the other Zs?
Trust Aman to ask that question. I was in an event, sorry for this digression, and he stood up and said, I have a question for you, which founder do you like the most? I don't know what I said, but this is
I asked between Mamaearth and us, and that was my answer.
Maybe Zomato, we learn in multiple categories from them.
Thanks for a straight answer.
What does Swiggy do better than them?
I'll not take that one.
Yeah, I think Krishna, you had a question.
I can hear you. What disruption keeps me awake or excited? Right now, you mean, right? Topically. Topically, there are multiple things that are happening. I think even a business, if you look at our overall portfolio, we thought that, okay, food is, matured, it's a duopoly, now profits are coming, etc. And bam, 10-minute food delivery hits you in the face. So across each of our categories, we have asymmetric stuff happening right now. So if we just sit back and just say, okay, let's continue the journey, I think the innovator's dilemma will play out all over again. That is in food delivery, I think 10-minute food keeps me awake and excited. There are no different answers because every asymmetric opportunity will make you sweating as well as be excited. I think in Instamart, I think it is full of asymmetries, so the category itself is a live wire. At a broader level, I think, I'm sure, comes as no surprise, but AI is keeping me awake and excited. I don't know what happens in that way. That has, I think, profound implications for all of us. Hi.
Hi. So I'm from a healthcare background, a medical professional, and QC for us means quality control. So I'm just asking you, I mean, do you see quick commerce playing a role in healthcare? That's one question. And second is, do you see a compromise on quality control or quality of outcomes because of the agility to deliver quickly? Like in healthcare, we have a limit beyond which we cannot go, and we want to make sure we deliver the best outcomes. So quality control becomes our bottom line. So just your thoughts on that.
Cool. I think on the first one, we are already playing in healthcare, but only to the extent of pharmacy delivery for now. Beyond that, we don't have any plans as of now. The second one is, yes, I think moving fast. If you look at the overall category, we are at probably 4,000 to 5,000 stores right now. And this used to be 1,500 to 2,000 not that long back. So with agility comes a few loose ends, but I actually think that overall, if you look at complaint ratios, etc., nothing is breaking. In fact, a lot of the customer metrics on quality, refunds, redressals are slightly down. And honestly, our bar is not the same as performing a surgery. We will fail 2% of the times and 1% of the time, and I think we just have to wake up from that and do that. I don't think these are crazy time to market opportunities, and as long as they're within a certain range of failure, I think you should just keep moving and getting better every day. Our risk, we're not playing with the blast radius that you are, so we can afford to be that much more agile and take a few risks. Hi.
Hi. This is Srivar Kheruka from Borosil. And also, like Aman, I think we've done thanks for your support in the sense that we've done well with your platform. But the question is really from where you started. You said in 2019, if I got you right, you tried to leverage general trade stores as well to or maybe I misunderstood what you said, but the question is, there's so many general trade stores across the country, and is there some way to leverage that, or because what we see from our general trade is that there's a lot of pushback on quick commerce, at least emotionally there's a pushback. They may not be able to do anything about it, but do you think there's a way to leverage that infrastructure already built over the last decades, or you think they're at odds with each other?
No, maybe it is possible. We weren't able to figure out how to make it possible. That's the honest answer. I think we just could not figure out how to solve for digitization, SKUs. What the consumer wants is today closer to what the consumer will want in a year is 50,000 SKUs with 85% plus availability and 99% plus fill rate. Anything less than that is a downgrade, and there's no going back to that. If that is possible, then that can be done. But if you see the iteration of QC, grounds up, zero-based store building, purpose-built for this has worked out better. Even in cases where, let's say, tech companies have bought out grocers, it hasn't been easy. So it's not just because they are in a different world of their own. Amazon's made a few acquisitions. Folks have tried, but they haven't really, sent shockwaves across. So at this point, I find it difficult to see how
do you see
India One shops.
Do you see ONDC making an impact?
And it's been a few years now, Kawal. I think there are a lot of days when we're not thankful for the businesses we're in, saying it's so punishing, like so many moving parts, have to manage 500,000 delivery partners, then hundreds of thousands of restaurant partners. But I guess the good part of it is that there is a certain barrier to entry in some of these businesses. AI is not going to change, not going to give a new business rise. It only opens us up to competitive risks between the players in the category. So to that end, I think ONDC is a decentralized marketplace, obviously connecting multiple players, but I don't think the playground is that fertile and mature for independent participants to already just work together to create that order. I think, you know, a consumer, a restaurant partner, a delivery partner, all have to come together in 30 minutes to deliver this thing. And this business is all about habit, and habit doesn't get solved without reliability being above a certain level. So at this point, I think it's still not super well constructed, but we're paranoid to always understand if there's a new paradigm, and then we need to play ball.
I think there are a couple of questions in the front.
Yeah, just looking out a little bit further, I have no idea whether that's a discussion at the company at all or not, but is there potential for drone, switching some specialty deliveries to drones? I mean, what's the discussion here with the government or anything?
We haven't had discussions also either. There are companies that are building in this space, but any bit of napkin math that we did was not working out to be conducive for this right now. So we haven't proceeded that much. That's the honest answer. Just too many. We're in this place, we're saying we're okay to not be first in market and maybe do a fast follow if it is going to be breaking out.
Hi.
Hi.
I would like to follow up on the expansion strategy. You mentioned that you're selecting the dark stores from a perspective of whether they can fix the operational part, but are you also considering the consumer demand that is coming from a certain neighborhood? And then how do you doing the analytics for selecting a new neighborhood and testing?
So we already have a bunch of markers from just maybe 10 years of running the food delivery business that allows us a basic cut. Obviously, it has its own blind spots. The TG has some overlap, but it's not like a full overlap. So I think right now there is no marginal utility to that data in terms of dark store expansion because it was useful in the first couple of years. But right now, if you are a new player in the market, you can just go and understand where everyone else has built their stores and build it next door. You don't need to have any data to understand where the consumers are. The consumers are where the dark stores are today.
Thank you once again.
Thank you so much. Thanks for patiently listening to me.
Always a pleasure. We could go on for sure for many, many hours, but on behalf of all of us here, thanks for coming down, and I believe you walked the last 20 minutes because of the traffic situation in Bangalore, so apologies for that. And good luck. I think this is so exciting, and all of us are really looking forward to your success and the overall ecosystem success.
Thank you. Thank you so much again. Cheers.
Bye-bye.